In 2008, the global financial system was on the brink of collapse. One by one, major banks were failing, mortgage defaults were skyrocketing, and people were losing their jobs and homes at an alarming rate. But what was really happening behind closed doors, Too Big to Fail, 2011, takes us deep inside the power struggles between Wall Street and Washington, as government officials scrambled to stop a full-blown economic meltdown. This is the story of how the US government saved the banks, but not without controversy. Let's break it down. The film follows Henry Hank Paulson, played by William Hurt, the US Treasury Secretary, as he tries to stop a financial disaster. At the heart of the problem, subprime mortgages. Banks had been handing out home loans to people who couldn't afford them. These risky loans were bundled into mortgage-backed securities and sold to investors as safe bets. Wall Street made billions until homeowners started defaulting. With millions of homeowners unable to pay their mortgages, the entire financial system began to crumble. One of the first casualties? Lehman Brothers. Lehman Brothers, one of Wall Street's biggest investment banks, was drowning in bad mortgage debt. Investors lost confidence, and the company was on the verge of bankruptcy. Paulson and his team scrambled to find a buyer, someone who could rescue Lehman. They turned to Bank of America. They backed out. Barclays, UK. Bank. British regulators refused. With no other option, Lehman Brothers collapsed, filing for the largest bankruptcy in US history. But instead of calming the markets, Lehman's collapse created full-blown panic. Investors started pulling money out of banks. Credit markets froze. Banks stopped lending to each other. Companies that relied on short-term funding faced collapse. This was no longer just a Wall Street problem. The entire economy was in danger. As fear spread, other major financial institutions began failing. AIG, American International Group, one of the world's largest insurance companies, had insured all those bad mortgage-backed securities. Now they couldn't pay out claims. Merrill Lynch, another Wall Street giant, was forced into a fire sale to Bank of America, Morgan Stanley, and Goldman Sachs. They were on the edge of collapse too. Paulson and his team realized if they didn't act fast, the entire financial system could crash. With bank after bank failing, the US government faced a historic decision. Let the banks fail, which could lead to a second Great Depression. Bail them out, using taxpayer money to save the institutions that caused the crisis. Paulson pushed for a massive $700 billion bailout called the Troubled Asset Relief Program, TARP, to pump money into the financial system and restore confidence. The plan was controversial. Why should taxpayers save billion-dollar banks? Why weren't CEOs being held accountable? Would this actually fix the economy, or just reward greed? Despite the backlash, Congress approved the bailout. The government injected money into Goldman Sachs, Citigroup, JP Morgan, Morgan Stanley, and others. AIG also received an emergency $85 billion loan to prevent a total collapse. The bailout saved the financial system, but at a cost. Wall Street survived, but millions of Americans lost their homes, jobs, and savings. No major bank executives went to jail. Many of the same banks returned to risky financial practices within a few years. Paulson, Bernanke, and Geithner defended their actions, saying the system had to be saved. But many questioned, was this really the only way? Did the bailout protect the rich while leaving everyone else behind? Too Big to Fail gives us an inside look at one of the most controversial financial decisions in history. The 2008 crisis changed everything, from how banks operate to how the government responds to financial disasters. But have we really learned from it, or are we still at risk for another collapse? What do you think? Should the government have let the banks fail? Did the bailout do more harm than good? Let's discuss in the comments. Like and subscribe for more financial breakdowns and real-life economic stories.